comes to getting on the other side of money, what's the other side? That's when money's working for you. So during the course of our conversation, I promise we won't be long. I'm joined by Miss Stephanie Stewart. Stephanie is a real estate professional based out of Milwaukee, Wisconsin, where I think is right next to the North Pole. So they have just come above freezing temperatures. But the beautiful thing about working with Stephanie in this capacity is the brand that she's building with Educate to Own. Because her focus has been teaching people the things that we didn't learn so that you can qualify for, identify and buy the right property, and then pay that property off in record time so that we are becoming homeowners, not property managers for the mortgage companies. Am I making sense? Mm-hmm. Now, Stephanie, is there anything else you want to share about today's trends or market before we jump in?
I know it's a hot market, and right now I'm fighting 53 other offers on one house.
It is absolutely a seller's market out here in the marketplace. And it's, you know, it's insane what that does for housing. And we'll talk about some of the trends in finance. And oh, there's Dr. Turnquest. Good afternoon, young man. Great to see you.
Hello, folks. How are you today?
Fantastic. So jumping in, as we talk about buying a home, I want to talk about the emotional experience, because I know they build it up. It's the American dream. Own your own home. But at the same time, there's a lot of emotion attached to the place that we live, where we raise our children, have our white picket fence and 2.5 kids. But real estate is also a business. And it's big money in the real estate business if you understand the numbers and know how to get the most out of the money that you have to create the leverage that you want. So as we go through our conversation today, make sure to ask your questions as we go along. Again, our goal is to make sure people know what they can do to help augment their ability to buy more. Somebody say augment their ability, how you can get help doing more with what you got already. Does that make sense? Mm-hmm. So as I jump in, a couple of key questions people always ask: how much is a house today? What can I afford? How do I qualify for? And I had a staggering realization the other day, Stephanie. Did you see this number? I just went to Google to say, what's the average price of a home in America in 2021?
All right, that number.
Well, it's two things, like 2021, and there's a lot of unique things about the pandemic and the global financial crisis, but what we're in is a market where inflation is running rampant. Where can you see inflation the most? Price of a home. $340,000 was the average price. Now, in that case, is for those people that are math nerds that are like $340,000 median, it means in the middle. So on one end, you got $50 million homes, and at the same time, you got $20,000 homes on the courthouse steps. And as you can tell, the heat map here says that depending on where you are in the country, homes cost more or less. So thinking about the people that are here on this call, got that Virginia, Maryland area is pretty hot. Prices are going up, population, et cetera. Fortunately, I'm still here in the South where you can still get some land and a house in reasonable range. But here's what I want you to know. Look at the trend from one year to the other, 15 to 17% increases. I know several investors are scouring the country looking for properties. Like if you own a home right now, how many of you get more than one call a day trying to buy your investment property? Like, no, matter of fact, do you have any? So it's definitely limited supply. And people always ask, so if you know the number's $340,000 average to buy a house, I'll just say up front, for most people, that means before they can buy the house, they need to buy some money, mortgages, right? And why is a mortgage a good investment for a mortgage lender? Well, they get to invest at a low price in something that's going to go up in value. If things work out, they make way more than the house is worth on interest payments. And if they don't, they get the house back to sell to someone else. Mm-hmm. Right? So it's a win-win for them. When it comes to us, we've got to get mastery over the magic numbers. And when I say the magic numbers, when it comes to the home buying process, down payment, credit score, debt to income ratio, and get as much help as we can get, because on the other end, they already have professionals working for them. Does that make sense? Mm-hmm. Now, Stephanie, you were talking the other day in terms of down payment ranges and programs. I know there's a correlation between and down payment. Why don't you share with everybody what you were saying in regards to those things?
Most definitely. So up here in Milwaukee, in Wisconsin in general, they're looking for you to have anywhere between 10 and 20% down. 20% down is going to take off of your PMI, which is an extra insurance that you have on for people who don't have that much of a down payment. If you do 10%, your fee is not as high, but if you do not have that 10% or 20%, your interest rates are definitely going up higher.
Right. And let's clarify that, because people, the first time I heard PMI, I thought it was a good thing. You mean I get private mortgage insurance? No, it means that I get to pay to ensure that if I don't pay, the mortgage company's insured against my default, but they still get the house. So PMI is just extra points. It usually costs 1% of total loan value added to your payment of interest and penalty is insurance for them. Second number, credit score. What I find, especially in our community, is many of us have credit scores that are negatively impacted by things that a professional could help us improve dramatically. And when I say dramatically, I'm not talking about anything illegal or untoward. I'm just talking about having a team of people work on things to get things going. And then last but not least, they say the credit score gets you pre-qualified, but it's your debt to income ratio that helps you get through underwriting. We're going to talk about all three of these numbers and specific solutions that our team has put in place to help people with every aspect of it. Getting additional income and cash flowing so that your down payment can get together, credit score, and your debt to income ratio. Making sense so far? So the last one, I talk about debt to income ratio because I find, Stephanie, that most people don't really understand how the companies calculate it. So we're going to do some quick math on what it is and how to make sure that we maximize it. So if you think about debt to income ratio, it's simply the mortgage company uses your monthly expenses as projected from what's reported on your credit. They divide that by your gross income, and that percentage, that number times 100 is your debt to income ratio. So I'll put a quick example together because there's anybody looking, can you tell what the big fallacy is on this? They're basing how much you can pay on amount that you never get. Has anybody ever gotten a check, saw the gross and saw the net and saw that the gross didn't come to the house?
Yes, all the time.
So we'll speak on that in a minute. So if you think about it, your monthly expense, you take everything, car payment. This is a short example. Car payment, $400, student loans, $500, credit card minimum payment, $300, plus you're adding a mortgage. So the first three we would call the front end debt to income ratio, and adding $1,000 mortgage to that gives you a total of $2,200 in mortgage expense. In monthly expenses. Making sense? So you take that and just divide it by your gross income. Now they divide your annual gross income. So if you tell them I got a stated income of $60,000, they divide it by 12, that gives you $5,000 gross monthly income. From there,
it don't matter, but as of right now.
Hang on. Let's do that for a second. All right, and let me grab some co-hosts. There we go. Thank you. I sure appreciate you. All right, so where were we on our mortgage exam? Matter of fact, y'all do the math on your phones. It's one of those things where if you think about it, 2,200 divided by 5,000 gives you a number, right?
Yes.
And in our particular scenario, that's a 44% debt to income ratio. Now, for those looking at it, it's only a number, but here's the thing, a ratio can be improved because if you think about it, a 40% or above debt to income ratio is the trouble zone. Meaning you got to think about it. The more, and when that's high, they either charge you more in interest or they won't fund the loan at all. Am I making sense? Because here's the two categories. The riskier you are, the less likely they are to loan until you get to the point where they won't loan it to you at all. So ideally, we want to have that debt to income ratio below 20%. How do we get there? Two things that you can do to improve any ratio that works this way. You can increase what's on top. You can decrease what's on top, or increase what's on bottom. Our system lets you do both, and here's how we do it. What if our team of experts got together with you, figured out a rapid way to speed up the payment process so that the car loans, student loans, credit cards all got paid off the next 6 months to a year? And so all you're adding is the mortgage. Oops, I got to correct my math on this. But now you got $1,000 mortgage. Second, annual gross income. Right now, sitting at 60, if we just add another $500 a month, that'd be a total of $66,000 a year. That's $5,500 in gross monthly income. Do the math on that, 1,000 divided by 5,500. And now your ratio is looking good, yes?
Yes.
18% debt to income ratio, get that credit score in the 700s, and that's how we win. How do we do it? How do we help people? Well, two things that we bring to the table that most people don't think about how much they need them, and it's on the upfront side. Because Stephanie, one of the things that I really value about working with you is as a real estate professional, you get to see firsthand what happens for people that go out and try to buy or sell homes on their own. Mm-hmm. I mean, and just think about all the things that go into the certification, the studies, and research that go into being a real estate professional versus someone that's out there trying to do it themselves. It's kind of like somebody deciding that they have a medical condition, but they're going to be their own surgeon. Does that make sense?
Right. There's actually something out there like that right now. It's people save so much money by not hiring a real estate agent, but they lost $30,000 on their home sale just because they didn't hire an expert.
I mean, and this is the thing. For a little over $4 a day, we put people in a position where our team of experts goes to work on their money. Because you got to think about it. You got experts working on your car, working on your hair. Wouldn't it make sense to have a team of experts working on your money? We bring those
Absolutely.
Through our partnership with MWR Financial or Making Wealth Real Financial with the Financial Edge membership. And our goal in this conversation is just to give people the edge when it comes to their finances in the most important money situations. Now, I put up front the price so that as we go through the value, people understand what this has meant to individuals that have taken advantage of the membership on both their personal home purchases as well as their investments. First thing you get, oh, by the way, for that same $79.97, you and your spouse are covered and have full access to all the benefits of the membership. So what we talked about up front, credit. Why do we talk about credit? It's important. With the Financial Edge, Credit Max is our credit restoration service. Now, I say credit restoration, not credit repair. We have a saying in our team, credit repair is kind of like putting a Band-Aid over a broken bone. There are a number of companies out there that claim to do this, but there's no one that does what we do. Average credit score increase for people working our system, anywhere from 50 to 150 points or more in their first 90 to 120 days working with the system. I actually just got a text message from a young lady that increased her score 90 points from the beginning of January till today. So again, 25 years experience, RESPA, CROA compliant Credit Reporting Act of America, by the way, for breaking that down, and a Spotless Better Business Bureau rating. And what you get is impressive, because the first thing that we do is work on understanding that based on your credit reports, you get personalized disputes from all the bureaus and rebuilding services. So that in addition to repairing the breaks in the past, the opportunity for people that have been in a rental market to do things like add their rent to their credit reports, boost the score on average 40 or 50 points, and then establishing new lines as necessary with the support and understanding. And only add in, I do tell people, well, what else do I need? And I say, well, you got to know the score to improve it. Our smart credit system, I didn't know this was going to happen, Stephanie, but it got to be my favorite thing. They recommended it. It was an extra $20, but to be able to strategically use credit in your buying patterns and have tools to help with the process is well worth it, because you got to understand that bad credit is just expensive. The higher your credit score is, the lower the interest rates are. By inverse, the lower your credit score is, the higher the interest rates. And it's always one of those things, because a mortgage amortized, it goes over years, you really see the impact over the short term and the long term, meaning this example, just based on a theoretical $250,000 home financed over 30 years. Do you realize that people are buying 2 and 3 homes in terms of the interest they paid, but only walking away with 1? You got to get to the place where we get credit on our side, because credit does affect what you put down, types of loans available, and the interest rate. And based on your score, what we target is a 720 and above, making sure we got maximum qualifications as we go through the process. Now, let me take a break, because I've been talking for a while, but I see some people on here that have taken advantage of the financial edge. I'll just share for you. One of the reasons I'm excited is I'm not talking about something I heard about. I'm talking about something that's worked for me, meaning I was in the low to mid 700s across the 3 bureaus before I found Credit Max. With Credit Max, I was able to get my credit score above 800. I'm right now at 810 for the first time in my life. Was able to refinance this house from 5.75% down to 3%. And imagine this, Dana, we just got the news. I'm being able to refinance a non-owner occupied property, 5.75 down to 2.9%. Is the difference that 100 points make. That's winning. And you know that the first one saved me $700 on what I pay here. And the second one, because that's income property, it expanded my margin an extra $600 a month. Yes. Anybody else have Credit Max testimonies? Oh, Danny, you have a story, right?
Well, I'm doing the exact same thing right now. I'm refinancing another rental property, one of my rental properties, because the rates, and I get, just like you, I get called all the time. And when my wife and I first got into the business, her credit score went up faster than mine did. And then mine went up also. And we're co-signers on a couple properties anyway. So that was perfect. And literally our mortgage company called us,
right,
trying to get us to stay with them. So we got locked in at like 245 or something, 242 or something, 2425, something like that.
So, I mean, it's definitely a time. If you got the right amount of equity, and especially if you got one of those rates from having invested over time, it's your market. And now, did anybody else want to share Credit Max, the impact it's had for them?
I got one.
Okay.
So one thing that I love about this is it came into my life as I was young. So that way I don't spend years messing up later. One thing that I was definitely able, because I can't wait till I be able to say I can get an income property with 2%. What? So, credit, I'm sorry, not credit. Well, yes, Credit Max and the system of smart credit. I'm able to use both of those hand in hand because it tells me what to do to increase my credit score. I was able to increase my credit score 80 points in a very fast period, so that when I did have to, I don't have no story with the house, but for my car insurance though, every 6 months I have to renew it. Every 6 months they also pull my credit and things like that. So the benefit of me being able to get that 70-point increase and me being in control of it is that when they called me to say, hey, I need to run your credit to see how much we're going to charge you for your insurance for the next 6 months, I was able to happily say, go ahead and do it. And it ended up dropping my rate down from 181 to 121. So that saves me $60 a month. Now that times 12 add up to something, adds to a down payment. So it's going to keep more money in my pocket.
Oh, that's a really critical point. I don't think most people recognize that in addition to your interest rates, your credit score does affect how much you pay for auto and homeowners insurance. And the better it is, the more of your cash flow you get back. Like a big part of where we're getting the money to invest for increasing down payments is getting our income back from the places that shifted away, insurance being one of them. Now, the next place we target is that debt to income ratio. And what do we say? We got to get the top number down and the bottom number up. So when it comes to debt to income ratio, where we focus is through our pillar called Equity Max. Equity Max is our debt elimination system. And here's our goal, is to make sure that over time, we provide a customized plan for people that allows them to pay off their debt based on their plan in record time and eliminates a lot of the time and money that gets sent to the banks and have more of that to use up for our investments. Am I making sense? So think about this. Yeah. With Equity Max, the process is straightforward and simple. You put in what you owe. your current debts, their payments, and the interest rates. And it actually breaks down what your creditor's plan is and the payment window. At the same time, Equity Max goes to work with the existing money. So it takes the same money you're spending until you create margin and shares with you the creditor's plan. Here's an example. This person would have been paying $209,000 over a course of 29 years based on the creditor's plan, because the creditors do have a plan for us. What's that plan?
Be in debt.
To be our creditors. It's for us to pay. You know, mortgage and mortuary have the same root word, right? They expect us to pay that bill forever and die.
Yes.
Here's what we do. 29 years goes down to 7 years, giving them interest payment of $73,000. That saves them $159,000. That's 21 years and a month. And I know for me personally, I did not realize that just based on what we borrow for our kids, our investments, we're going to be paying those debts for the next 24 years. Thanks to Equity Max and our customized plan and the extra margin that the system created for us, because we are talking about having extra money based on doing different things. We'll be debt-free in 24 years. Anybody else using Equity Max right now?
Save me $36,000.
$36,000 in interest.
$1,000.
And that's for people that are looking. Like, you got to think about it. Where's the down payment for the next thing? It's been going to someone else. Tia, did you want to chime in?
Sure. I'm using Equity Max, and my husband and I, we bought another home last year. And using Equity Max, they were able to, well, Credit Max and Equity Max. So like you, I started off in the 7s, and now I'm knocking on the door to the 800 credit score.
Let's go.
My mortgage company has been calling. We recently were able to refinance our home as well, and we're getting ready to refi again from 2.25, hopefully down to the 1.75. So fingers crossed. And Equity Max was able to shave off $270,000 in interest over the life of our mortgage, and taking it from 30 years down to 12. So I am excited and totally winning.
So imagine going, I don't think people understand the excitement. Imagine realizing I was going to be in debt she says you're going to be in debt for 30 more years, and that's going to be done in 12. And saving $300,000, that just makes sense to have experts help you, because it's not that, well, here's the next thing that we do. So that's the first thing. It's the top number is the debt, but the bottom number is the income. In our Money Max pillar, we've got a team of experts that go to work to make sure that we stop overpaying taxes. Put this in your notes if you're taking notes. If you're not, start taking notes so that you can write this down. The biggest bill in your house is taxes. I know a lot of people look around and say it's the rent or it's the kids. No, it's the taxes. We actually spend the first third of the year. It's still February. So would you imagine this, that we got 2 more months that our income goes to the government on most jobs? But with Money Max, we do a lot of things taking advantage of home ownership, being able to use cash flow strategies where the average person that engages with our system can actually get a pay raise from their job. Again, I'm living walking testimony. I've been overpaying taxes on the front end for years and hoping to recoup through a refund. If I filled out the forms right, I get some of it back. Our team of experts went in, made the adjustments, and got me an extra $636 per period. That's $1,272 a month in take-home pay. I didn't do it. I didn't know how to do it. I've been overpaying for years, but they got us together and got it right. Make sense? Mm-hmm. And all these shifts, if you think about what we're doing for credit, what we're doing for debt, and what we're doing when it comes to Money Max, maximizing the money you bring home from work, the last pillar is Wealth Max. Oh, this is just one of the examples. Wealth Max is our wealth generation system where we get mentoring and direct consultation with world-class, world-renowned experts when it comes to money, and have different strategies for using real estate to build wealth and really get to understand the advantages of owning versus renting. And one of my favorite parts, because you think about it, it's a comprehensive consultation because there are many things that our Wealth Max advisors do for us. But two of the things that they introduced me to, and Dana, if you don't mind sharing your testimony about this, I'd love to hear your perspective on it. But for me, it was a private reserve account, because up until we got access to this level of investment vehicle, my main savings vehicle for buying another property was the bank. And you got to think about what the bank's philosophy is. The bank, they loan money, they loan our money, but you get terrible interest rates on the money that's in the bank. But with the private reserve accounts, you can actually be your own bank. And because you share it well, Dana, I'd love for you to just share the process that we're going through of becoming our own family's bank.
Yeah, so that was one of the first things that caught my attention, because you read that same book that I read, Money Master the Game, and they referred to this vehicle, and I looked into it, and the companies that I contacted, I needed to have 200,000 in the bank just for them to take my call.
To play.
I was like, wait a minute, what? So give me a minute, I'll get back to you. And then when MWR came along, and all I needed was a membership for $79 for them to take my call and set it up for me, that right there was key. I immediately set up my consultation and got it started. And one thing that I saw that was pretty cool, that it's an insurance vehicle. And for years, you hear people talking about you can invest in a whole life insurance. You can invest in whole life insurance. But no one really, if you don't know how to do something, right, just knowing that you can is not enough. So these experts walk you through the entire process. And now I have an account set up because my 401k was taking a nosedive when springtime hit during COVID. And I was able to, because of a few things that the government put in place for people who are struggling, you could actually shift your money without being consequenced too harshly, right? So I shifted my 401k into my private reserve account. And now, Rick, I've become my family's bank. So here's what happens. Let's say you shift $100,000 into your private reserve account. And let's say my lovely daughter, Tia, says, Daddy, I need a car. And she wants to go and get a loan from the bank. I said, no, we're not doing that. We have our private reserve account. I'll take out 20,000. We'll set up a payment plan. You'll pay the family bank back. That money goes right back into the account. The original 100,000 never left the account because we took out a loan against it. So your 100,000 is still earning interest. Meanwhile, my beautiful baby Tia was driving a safe car that we took out a loan against our own family account. Now we're using our money serving two purposes. We're paying it back, our own payments, our own interest that we're paying ourselves. We set the terms, no hoops to jump through, and your money is liquid. I could do that same thing for a real estate investment as well.
Right. I mean, it's one of those things is once your perspective shifts and you get from the dependency on the bank to building your own independent bank, because here's the other thing you think about is the returns. Think about this right now. I'm not going to advertise for them, but I've been banking with the bank that rhymes with Bell's Cargo since the 80s. And it was only after I started seeing the difference in returns. Right now, that bank and every bank that's that size, so any bank that you can see a branch for, they're returning right around 0.1% on money. That's not pennies on dollars, that's pennies on pennies. In the private reserve accounts, the two that we set up, one is at 12%, the other's at 14%. It's 1,400% more in returns, meaning now that the money's not only growing, it's doubling every 6 to 8 years. And that's making money. That's next level. Does that make sense? So with that being said, there are a couple of other things that are part of the membership. I like to let people know that these are out there because there are a lot of people out there that might not be ready for investing, might be on the other end of the spectrum when it comes to sophisticated debt resolution, needing lien releases from the IRS, considering bankruptcy. Listen, before you take that bruise on your credit report, at least talk to the team, see if they can get you out of that situation, because just having a fresh start is all that most people need. So with that, that's actually my 30 minutes because I'm trying to be mindful of time. But let me summarize the things that we talked about. When it comes to just the Financial Edge membership, just taking access to the professionals, having them go to work for you, here's how you win. You get your credit restored best ever in life, increase the equity in your home, lower the debt to income ratio, you increase your buying power, You're able to reduce your taxes, and you're able to settle any of the bad debts just to get the loans. That's the front end process. Now, there are some people that say, well, what about if I needed to generate some additional income, make some extra money? I'm not having a conversation about that right now today, but if that's something that you need in addition to just help getting financially fit, let me know, because within our team, we have folks making anywhere from extra $9,000 to $5,000 to $10,000 a month part-time, while the company has systems in place where they will provide company-sponsored mortgage payments. If that part, making some money with us, along with having the team get your money back, is of interest to you, let the person who invited you know, because here's what's true. The conversation that Dana, Tia, and Stephanie and I share, every time we talk to people about the importance of getting the edge and getting the team on your side, always 3 categories of conversations. Number 3 person says, thanks for the information. I'm going to continue to do it, try to do it by myself. Pastor's working with me, Dana. He says, Richard, you need to learn to receive stuff. So I'll receive it. If this isn't for you, fine. At least you know that it's possible to get help, because up until this system, I was doing the best I could by myself too. But having a team of experts shifted things so dramatically in my favor. I just get excited to tell people about it. So if it's not for you, tell somebody else this is possible. They can get help. They don't have to try to figure it out by themselves. Number 2 person says, everything sounds good, but I have some questions. I want to know how it would apply personally to me directly, and need a walkthrough of the system just to get everything set up. If that's you, text that number, and the person that invited you, they'll give you the information. And then the number 1 person says, you know what? Not only do I like what I heard about how the experts can help, I'm curious, what are you talking about? Just putting an extra $5,000 in your income so that the number on the bottom got way bigger, way quicker. Text the person that invited you, let them know you want to see how that part works too, because it's a beautiful thing if you can lower your debts and increase your income. And the best way to get wealthy is to do both. So with that said, on behalf of my business partners and associates around the country, I encourage you, get the most. Give yourself the edge when it comes to money. Get your taxes down, credit scores up, get out of debt completely, and get to the place where your money's making money and you can become your own bank, because it's our time, it's our place, and that's my time. Night, everybody. Oops, let me pause.
Thank you.
Were there any questions? I know we went fast. I'll end the recording, but I'll leave room for